Hey, Mark, how you doing? Appreciate you being here. Sorry I was a little bit late. I should have topped off my soda. Oh well. Anyway, at least I got a little bit here. Thanks for being here. All right, let's get in the middle of this. I was hoping everyone had a chance to see my video. I released it, I don't know, 30 minutes ago. It's on the new Simplify Fund, SBAR. It's interesting. It's option based. We'll keep an eye on it. We need to put it in the buffer report. Okay, let's start with SPY. Well, the old daily chart of the SPY is just a freaking grind fest. I have the shorter term charts right here, but there's really not much to see right now. The Bitcoin chart, let's look at it this way. Let's look at this has just been a face ripper. The Bitcoin's on huge run up. I usually don't look at Bitcoin on daily bars, but man, that's good looking. I was seeing today that somebody, it's right here. Some quant service, somebody I haven't heard of, is calling for $210,000 Bitcoin, I think, within a year or something. I'll find the article and link to it. Anyway, all right. So Bitcoin looks good, obviously. Let's look at gold. Look at that. That thing's incredible. Let's look at bonds. Bonds are just straight sideways. Let's look at oil. Looks like Bitcoin's a place to be. That's the place where all the hot money is. XLKs, tech. I mean, money's not really in tech. So anyway, all right. Well, let's look at, let's check out the model portfolio first. It looks like I'm up slightly and the rest of the market's flat. I think, yeah, this is it looks like this, the rare case where YQQ is up at the same time GPTY is up. And I don't know, I guess ULTY must be flat, really? Who knows? Let's check out ULTY. It's down 18 basis points, which basically is flat. It could have been flat 15 minutes ago whenever so that's fine. I'm up a little bit more than the index is no big deal, just because by virtue of that short fund that happens to be up at the same time one of my long funds is. Okay, now we have new prices. So there we have ULTY has moved. It's down slightly. GDXY is costing me 21 basis points. Look at GPTY. Good job, GPTY. But now let's look with the new price. I think I'm actually going to be down. Let's look on sheet one. Well, no, I'm up a little bit, up 11 basis points, but SPY's up a little bit more. All right, well, let's look at some other stuff. Let's look at the GPTY verse. We'll start the index buffer report. Indexes aren't really moving much today. Look at that FIRE fund, FIRI, just killing it. Just killing it. Happens all the time. I need to review that fund. Here's where I need to put SBAR and XV. I'm going to start following XBAR and XV. And I'm also really interested. I interviewed last week. I'm getting more into the liquid alternative, more complex funds. There's one called VVAX, VYLD? It's not Vanguard. You think it'd be Vanguard, but it's iShares, and it's it's a fund that sells vol, but they don't pay a yield. They just sell vol as a growth strategy. Well, anyway, I guess since I'm talking about it, we have to take a look at it. But I'm probably going to compare VYLD and SBAR and XV, similar types of funds. This is a more exotic type of strategy to also, like SBAR and XV is. So far, there's not much to see, but I mean, it weathered the downturn. Well, there was one day it was down a lot, but if you just go on closing prices, it looks like it went from 25 to 21 and a half at worst. That's 3.5. It's about 15%. So it was down with the market. The NASDAQ was down about 15%. So was it. And it's recovered slightly since then. Anyway, we'll keep an eye on VYLD. We'll keep an eye on SBAR, Simplified Barrier Income. Probably not fair to compare them to each other because they both sell vol, but SBAR sells vol to pay a yield. So the return stream will be different. But look at this giant gap up SBAR did on, what day was that? It could just be because it just started trading. And it's probably not really a giant gap up. But in any event, SBAR has some potential, and so does XV. If 15% is enough for you, if 15% yields enough for you, I think this will probably be similar to like a SPY-T that's or some kind of 20% target fund, except with a little less target, so to get a little more upside. That would be my guess right now. All right. Well, let's see. What else should we look at? GPTY verse. All right. Let's look at the yield max buffer report. Well, look over here real quick. USLI is getting murdered today. THTA looks good. All right. Well, anyway, let's go over here. So index buffer report. Or I'm sorry, yield max buffer report. SMCI was the one that was up the most yesterday. I remember SMCI, however you want to look at it. Today it's down the most. Misty is up the most. And just think about Misty. If Bitcoin goes to 210,000, like that quant firm said, I'm trying to think the name of the quant firm, but I'm just trying to think. I don't have any Bitcoin, but I mean, I'm just trying to think what that would do to the price of Misty or the price of Mr. Or, I mean, I know what it would do. It'd be an exciting time to have that stock for sure. All right. So what else can we look at? We can look at anything you guys want to, but I was trying to pull up the LFGY verse. The Wi-Fi extender's right freaking here. I don't know why it's so slow today, but oh well. I have really fast internet. I'm supposed to, so it just sometimes doesn't work out. All right. Well, gosh darn it, you guys be kidding me. All right, here we go. There is LFGY. You can see LFGY is up 0.5% today. That's nice to see. Thanks to Opera, which has been up a lot lately, and MicroStrategies. We were just talking about that. Riot's holding them back, and a few others. Here's GPTY. This looks great. We've already seen that this was helping my portfolio. Is helping me beat the market slightly. So I'll take it. I will darn sure take it. Arista Networks, ANET. If you guys, okay, I'm weaving. I'm going to weave back though. I'll remember where I was at. Arista Networks. I I was joking the other day and said this was the company that Clive Davis used to work for. These guys signed Mariah Carey or something, but I think it's a different Arista Networks. Or that's Arista Records. Or I don't think it's the same thing. That's all right. This freaking thing, though, until recently had been on fire. I mean, had been absolutely on fire. Well, anyway, they pulled way back, but $79 stock, man. This is probably I need to put this one on the list. This might be a good pullback buy. This thing in the last bull market was just insane. I don't know. The next bull market, I don't know if it'll be as insane as the next one. It competes with Cisco and Juniper and those kinds of things. So who knows? All right. I'm just a sucker for tech stocks. All right. We'll be back. We'll be back over to the GPTY verse. I was just going to make the case that I probably would never be comfortable selling covered calls in Arista Networks. I thought it was more expensive, but in any of these high-flying tech stocks, but an ETF that does it professionally and does it in a basket of them is real appealing. I really think this is the one I'm going to add tomorrow. Tomorrow's the last day of the month. When I rebalance, I've been looking at what I'm lacking, and I think, and it's subject to more study tonight, but I think I'm lacking crypto exposure, especially if it does rally here. And I don't know. We'll see. But I think LFGY might be good here. I'm still going to stay hedged too. I'm still going to have some hedges on. All right. Well, let's see what else we can get ourselves in the middle of. Let's look at the Chippy verse. Now this is no bueno. What is going on with the ACMR? You got to be kidding me. ACMR? I'm guessing they missed earnings. It is earnings season. Speaking of earnings, we got to go look at we're going to go look at the trades I talked about yesterday. I haven't even checked them out yet. I have not even looked at them. Well, so we'll find out together. All right. So this one right here is, it's just down a little bit. It's not that big of a deal, right? It's down 26% this month. It's having a rough month for sure. Yeah, it's down 13.3%. On that chart, it doesn't look like 13%, but it darn sure is. Yesterday we closed it, or these guys closed at $20.70. Right now we're trading about $18. That's $2.70. Call it $3 on this. Yeah, 15%. Yeah, a little less than 15%. 13%. All right. Well, anyway, everything else looks all right, I guess. Outside of NXPI, what's going on with NXPI? This one actually looks like it's breaking out. It's just pulled back today, but it's been doing great. All right, we'll let those guys worry about those trades, right? That's what I figure. All right, so let's see what else we can get ourselves in the middle of. I promised, who was it? I promised Ethan that I was going to look at some stocks, so I guess we could do that now. But I'm kind of curious as to how these. I kind of want to look in option strat real quick. This is the wrong account for option strat. Got started. All right, this is the option strat account. Kind of a cloudy day here in Austin. Yeah, you see there at 74 and cloudy. I had the window open back here. Overcast. I didn't want the weather up. All right, I did want to see these real quick, and then I'll get to Grateful Traders um, ideas, or he wants me to look at a few tickers, so we'll check them out. All right, so it looks like, what did I give you guys? SoFi, PayPal, Starbucks. It looks like, I don't know if they've even had earnings yet. I think the earnings are after the bell, actually. And then I gave a hedge trade that's down $54. Oh yeah, it's four. Okay, so it's four bullish trades, or is it three bullish trades? It's three bullish trades and a hedge trade. I think I have the SoFi trade. I saved it twice. So anyway, the bullish trades are up about $120. The hedge is down $50. All right, so we'll see. Hopefully, we won't need the hedge. The hedge is just kind of for a big pullback. Don't think that's going to happen, but not a 1 standard deviation move, but like a 2 standard deviation move. If it does that, the hedge will probably be worth $1,000 or more dollars, depending on how far it pulls back. So hopefully we won't need that one. But then Starbucks, PayPal, and SoFi, I mean, I think they're all after the bell. Earnings Hub. Let's pull up Earnings Hub. There's a lot of good liquid stocks that have earnings this week. Google is coming up. But yeah, here's after the bell today. Starbucks is after the bell today. So, okay, so I guess SoFi and PayPal did have earnings, and those trades are already up $60 or something. Well, that's good to see. Hopefully you guys did those. I mean, we'll see. I mean, it's early, but PayPal's up $71. All right, well, let's see what happened to PayPal. Let's just click right here. I just wasn't worried too about it because I had three of them, and I figured at least one of them would do all right. And if they didn't, I had to hedge if the market did something I didn't expect. So that's why I hadn't checked them yet. Looks like it was up on the open. Anyway, PayPal's generally up, which is good. That's up helps us because we're selling puts. So if it moves up, it makes our puts worth a little less money. Now, PayPal is down 6%. So that's probably right at our buffer. And then on Starbucks, of course, that's not till after the bell. We could maybe add one in Snap or Booking or First Solar. I don't know if those are liquid enough. Before the bell tomorrow, I don't really see anything, but after the bell tomorrow, it's Microsoft, it's super liquid, Facebook, Hood, Qualcomm, eBay. We'll try some more tomorrow, but so far so good. All right, well, let's go back to, I'm kind of curious about the one where the stock's down. That was it? Spotify, yeah. Oh, Spotify was not. I didn't do it. I did SoFi. I could have sworn I did Spotify. All right, well, let's see what SoFi did. Let's see if SoFi's even. Okay, well, SoFi, I just clicked on the wrong one. SoFi, Spotify, whatever. SoFi's extremely liquid and cheap. Yeah, and of course, they hit earnings and they were up. So that makes sense. All right, so now let's look at the actual trades. Let's look at what we were actually trying to do. They're small trades. You couldn't take your wife to dinner. You'd have to do it multiple times, but you guys know how to do that. But just on a 2x1, where you're selling two put spreads to buy one call, trying to make $70 and risking $429, it looks like you're doing pretty well at this point. So that's good to see. Oh, and you can let's look at the profit loss graph. Here's the profit loss graph right now. So you can see the stock's price keeps going up. The position can keep making money, but by the same token, if the price drops from here, the fund will make less than $70, but it has to drop more than 7.6% from here. So this is a really good looking result right there. SoFi, so PayPal's the same thing. It's up a little bit. So let's look at it's the same thing. It's basically like a synthetic stock position, but with limited downside. You can only lose $500, and it's where you can even see it's Delta 17. It's equivalent to 17 shares of stock. So, I mean, yeah, it's not like a lot of stock, but you could do it multiple times. And when you buy 17 shares of stock, you don't get an income. So right now here on this one, looks like it's up $60 or so. As time passes, it will be up more like 70 unless the price keeps going up, in which case it can be more. Now, if the price goes down, that sucks, but there's a 7.1% buffer from where it's at right now. So if you did these in real life, I need to go look at my Tasty Trade. You did these in real life, they're worth more than the credit. You're trying to go for a $70 credit and it's worth $73. If you're doing as well as this is in the back tester, just take it off because you don't have much more to make. I mean, I guess if the stock keeps going up, but you just landed in the middle. Just take this off and call it a $70 winner if you're able to. No reason to take the risk on it going the other way. We'll roll it into another trade. Sometimes the back tester doesn't gives you too good of a feel. So, but this one right here, SoFi is up $64. The most you can make on that one was $70. If you have that in real life and the math is the same, yeah, just take that off. Take that off and we'll find a couple more for tomorrow. Anyway, so after the bell, we have Starbucks after the bell. All right. Let's see. I'll go look at ETH and stuff now. All right. How does that sound? I'm sure I'll go look at Grateful Trader stuff. Yeah. Okay. You put it back up there again. Okay. So PDI. Okay. Well, let's just take these one at a time. Dynamic income. I mean, I don't know. Dropped from 20 to 17. It was down so 30% from top to bottom. I mean, pays a good income, 14%. So that gets my attention. 14%, heck, just depends on how the freaking NAV does. It looks like the NAV was pretty much sideways, but unfortunately in a face ripping up market. But it's an income fund. It's meant for diversification. Anyway, all right. So what else do we have? I like this one, TPNM. I've looked at that one before. Well, let me stick with this. I'll stick over here. Okay, ECAT, ECAT. Edward Charlie Alpha Tom. This one's, I just always look at how bad it did in the last pullback, because that last pullback was a big stress test. This thing pulled back from pretty good low pullback here, but okay, what is this? It's a BlackRock ESG Capital Allocation Term Trust. ESG. It's not, ESG isn't like DEI, is it? I'm just joking. All right. I like this 22%. What the heck? Okay. So that gets my attention. It pays a monthly dividend, paid a 30 cents there, 30 cents there. And it looks like it pays the same every month too. That's important to a lot of people, not so much me, but that's impressive that it pays the same every month. It's some kind of structured deal. Wow. And it pays 22% and pays the same every month. Now the drawback is the NAV, in a good market, the NAV went from 17 to 15 over the course of a year. That happens when these higher paying funds, that's partly due to this depletion. It's all due to the depletion. It's either due to the depletion or to the parent assets performance, or the fund's ability to track the parent assets performance, I guess. Anyway, interesting looking fund. The 22% looks cool. I guess we could look at the positions. closed-end funds. I mean, you could go. There's all kinds of news stories about it. Just go read some of these stories, and it'll probably tell you a lot more than I just did. But anyway, all right. So ECAT. What is the next one we're going to look at? It was BCAT. Oh, okay. ECAT and BCAT. Okay, BCAT is BlackRock Capital Allocation Term Trust. It's 22%. I mean, it looks like a similar type deal, some type of. I mean, it's closed-end funds. These are a whole new specialty that there's probably guys on YouTube, but there are, I'm sure, that know all about closed-end funds. It's just not me. It is just not me. CERN BlackRock announced estimated source of distributions. BlackRock Enhanced International Dividend Trust. There's so many BlackRock funds, and I'm sure all these are great funds. BTX, BlackRock Capital Allocation Term Trust, and BCAT. That's the one we're just looking at. Okay, so I guess they just announced new dividends, or they set their dividends. They're 28 cents per share now. Yeah, each of the funds has adopted a managed distribution plan, i.e. they don't pay you all the dividends, they pay you a portion, but they try to keep it steadier. There's advantages to that also, and it should help in theory with NAV gain potentially, because they aren't paying all the dividend out. That's the paying all the dividend out's the biggest problem with the NAV. So anyway, so right here it says, in the case of, and it's talking BCAT and also these other ones, but BCAT and ECAT, a monthly distribution based on an annual rate of 12%. Oh, and 20%. Okay, it's 20% for BCAT and ECAT. Okay, so it was saying 22%, but the target's 20%. So these are BlackRock 20% target funds, closed-end trust. So they aren't doing options that I know of, but I mean, you can get 20%. You can also use futures. You can use swaps. There's other ways to do it. So yeah, this one's really has a good eye. Good eye. This one's interesting. I mean, it bleeds a little bit, but I mean, it pays 20%. I mean, let's compare it to SPY-T. SPY-T bleeds a little bit, but pays 20%. Let's go. But SPY-T doesn't bleed a lot. SPY-T's a pretty darn good little fund there. Depends on your needs. Check with your planner. All right. So what do we have here? So BCAT is throttling SPY-T. Oh my God, you got to be kidding me. All right. Fake news. This is a bad test. Technical difficulties. That didn't happen. Never mind. I'm going to go erase this video. Nothing could beat SPY-T. Now, anyway, that's awesome to see, though. So let's look. So this goes since March of 24. That's when SPY-T was incepted. SPY-T has a total return of 5.79%. And BCAT's 13%. That's nice. Nice. Now, the dividend, SPY-T paid, well, they both pay 20%. Well, they're both target funds. So let's compare triple QT to ECAT. There was another one called ECAT. You got to be kidding me. Something's wrong with the back tester, because there's no way these are losing. I mean, I'm just joking. Let's look in the latest pullback. Let's look from January 1 to the market low. Let's see how triple QT did against ECAT and BCAT. All right. ECAT and BCAT also beat it in the pullback to the market low, or ECAT did. Now let's look at BCAT. Yeah, these are good funds. Nice job. Now let's see if Boy, it's a good little fun there. Man, yeah. All right, good pick, Ethan. All right, so what else do you got for me? That other one, LPMN or something? I've looked up that one before. That one is an interesting fund. It's a long short. I think you know about it. Swaps are like options that banks do with each other. And there's also something called a swaption, which is like a mix between a swap and an option. But they're leverage type notes or agreements that institutions go in with each other. BlackRock might sell a swap to JP Morgan. And lots of times the swaps or oftentimes the swaps are basically options, but they're private. They agree on a strike price, a premium. It's like a handshake between two people. So, or it's a private deal. So that's what my impression of a swap. If anyone has a better, I never worked for a big bank or on Wall Street, but if anyone has a better definition, let me know. But yeah, swaps and options. And also they do these things called structured notes. And a structured note is where they take an option strategy, like a covered call, even like a strategy where they do a covered call every 2 weeks and they roll, they can put a whole strategy inside a structured note where the bankers can look at the covered call and they can figure out how much income that thing puts off. And they make a note that puts off the exact same amount of income and has the same risk parameters and everything. My video this morning was about SBAR, which is what Simplify is coming out to compete with ETFs that have these swaps and these notes. Because when you're doing swaps and these notes, it's not as transparent. And we all know from watching Rod's channel and stuff, it's great to be able to guess what the dividend is or see exactly what strikes they're in and see when they're getting blown out and how they're doing and being able to evaluate the trades. It's really it's interesting. You can't do that when they're trading swaps, because when they're trading swaps, it's an agreement between two banks. So anyway, ELN is an electronic linked note. So I guess it's like a bank note or a note that two people sign, but electronic link. So somehow they make a fund out of it, or they make it tradable. Maybe I think in ELN they make it tradable. There's like we could look it up. I just don't want to get that in depth. But there's ETFs, there's ETNs, there's exchange traded funds, exchange traded notes, and then that one is an equity linked note. But in any event, they're all derivatives of derivatives. And anyway, okay, TPMN. TPMN is an interesting one. I've looked it up before and I forget what it is. Is it like BTAL? Oh no, Timothy Plan market neutral. I've seen this somewhere. I ran into this somewhere. Yeah, I ran into this somewhere else. But yeah, so this one goes straight sideways in an up market. So but then when the market starts to go down, it drifts up. I mean, that's pretty powerful. Now let's see, it only pays a 4% dividend, but I mean, you could get this one for the NAV. Look, year to date NAV performance is up 1%, whereas the SPY's not up 1% right now, year to date, right? SPY's down, right? Or what is the SPY down? 5% year to date, 7%, something like that. Let's go look. Yeah, 5.7% right there. So, yeah, Timothy Plan. I'm all about it. Don't know anything about it. Maybe I should do a review on it. But anyway, thanks for bringing those to our attention. All right, you guys want to look at an option trade real quick? Let's see what's going on. Who has earnings today? Let's do Facebook. Well, let's do. It doesn't matter. Those are just so liquid. All I care about is liquidity. We'll just pick one out and do it. I guess we should look at Trade Vision first. So I brought up the dark pool trade. I tried to do it a long time ago, so it would already be up, because I'm always griping about how slow this is, but for some reason it doesn't fetch it until you're looking at the page or something. Anyway, I went ahead and got this, and I really like this. I just don't like how slow it is. Trends AI is faster. We'll just look at Trends AI. Okay, let's see who's on breakout alert. Colin Burr, actually, what the heck is this one? CLBR, $12. Regulus Therapeutics. I don't know about any of these. All right. They just gave a bullish signal in Ferrari, John Deere, KKR, UBS, SNPS. SNPS, did they have earnings today or was it Snap? It was Snap. It wasn't SNP. Never mind. I still don't see why the freaking dark pool can't. The dark pool's the coolest thing about this. I just, come on, dark pool. There's a lady on CNBC named Stephanie Kammerman, and she advertises dark pool stuff. She's Texan. She's from Dallas. She's kind of flashy. I like her just because I'm like Texans. I don't have her service or whatever, but she's been talking about the dark pool forever. All right. Before people even knew what it was. All right. Well, that was a bust. Let's do something I know how to do. Let's go to this earnings thing. Let's pick out a stock. And I was going to try to use the dark pool to see if where the money had been coming in on bullish or bearish, and then based on that. But let's just choose bullish. I mean, stocks don't always go up, right? Plus, I have the hedge trade. If the market goes down, if it goes down fast enough, it should be all right. So, I mean, let's just do. I mean, Facebook's $549. If you swing and you miss on one of those trades, it could just set you back a long way. When you hit you hit PayPal and it's a $20 underline. I mean, of course you can do multiple contracts, but one rule of trading is you never have enough contracts on whenever you have a winning trade, and you always have too many contracts on whenever you're sitting in a losing trade. It just gets kind of the same law as Murphy's. It's a related law to Murphy. Murphy was an Irishman, and my family's Irish. All right. Well, we got Apple and Amazon and MicroStrategies. Let's just maybe look at a MicroStrategies trade. Because we were just talking about Bitcoin. If Bitcoin's up and stuff, it's MicroStrategies is liquid, and it doesn't cost $500. It used to cost a lot more than that, but it's a liquid beast. And I don't know when they have. Oh yeah, I do. It's Thursday. Of course, I just saw it. I know when they have earnings. All right. So we just do something for this week. Look how liquid these options are. I can just tell the amount of green is generous to the amount of red relative to where I'm dragging these strikes to. All right. So let's just do this. Maybe go down try to go down a standard deviation. I don't know if we can afford to. Maybe go down half a standard deviation, something like that. Okay, so we'll sell that. And then we can maybe look at that. And then we can maybe adjust this like this. All right, $280 credit on $3,200 loss. See that Delta 50? This simulates 50 shares of stock. What I do is I open another tab, and in this other tab, I hit duplicate, so it has the same trade open. But then I hit add by Mr. So I hit buy shares, and then I change the long 100 to 50. This is a good secret, you guys. So change the shares to 50 and then just remove the options. They should do this automatically. They should bring it up like this. So this is the equivalent trade in stock in the other window. So there you can compare each trade. So the white is the option trade. So if the market goes way down, like a 3 standard deviation move or more, the option trade does better. The market goes down more than 20% or something. when the market goes sideways, they're down 4%, down 3%, down 2%, even if it goes up a little bit, even up 1.5%, then the option trade does better. However, then when it gets from up about 2% to up 10%, the stock trade does better, but the option trade still does well. And then if it gets up more than that, the option trade takes over again. Here's the other thing is this is only at expiration. We usually, and I got this from Jay, they don't hold it all the way. They hold it till about halfway lots of times. And look what you do. Look at the white line. The white line is your profit and loss graph right now. Okay, so you have a limited loss on the downside. Your profit and loss is in line with stock right here, but you get bonus money on the upside. It's almost like free money because you have less risk, less black swan risk, same risk in the middle right here. And then, but if you get a blowout move on the upside, there's a little extra in it for you. And you can see it as you bring time by, the longer it goes, the more the white line differs slightly from the stock's path. But if you like this trade goes out to Friday, so we could go to Thursday at noon. There's Thursday at noon. If you roll by Thursday at noon, you're essentially got the system hacked where you have the profit and loss of stock, but you get extra if it goes up more. And if it goes down more, you don't. I mean, you kind of have a best of both worlds. It's like it's a convex payoff because there's more. It's asymmetric on the upside, and the further it goes up, the better you do. So it's max convexity trade. What I like about it what I really like about it is you don't have unlimited downside. Your downside is limited. So anyway, all right. So that's a good trade. I'm going to share that. I'm going to save that and share that. Or that's a trade. I don't know if it's a good trade. I mean, MicroStrategies needs to go up. It's $270. It's a lot of money. It's $3,200. Let me try to make it smaller. Let me try to narrow the spreads a lot. I mean, narrow the width a little bit. All right, this is only worth 46 shares now, but whatever. That's fine. You can't buy. The other thing is when you buy 46 shares of stock, you can't buy 46 shares of stock. We can just go over here and switch it. That's what's good about setting it up like this. All right, you can't buy 46 shares of stock and do it for a credit and get a $257 credit and take your wife to dinner. If you want to have 100 shares, then you just do another. You just add another leg on the options. So it's a 2x4 now, and now it's worth 93 shares. If you want more risk, we'll go switch it here. But you're synthesizing stock and you're kind of hacking the system. I think it's pretty neat, obviously. All right, well, I'll share this with you guys in case anyone wants it. It's a big trade, though. Try to do one in a cheaper stock, maybe. Strategy must include at least one option. Oh, I tried to save the frickin' what I was comparing it to. I'm just going to save the one unit. You guys have to set your own unit. This one right here is worth like 30 or 46 shares of stock. Copy link, and I'll give it to you right here. Appreciate your patience. All right, there you have it. Okay, what's the deal in? We covered that. What are some option rules? Okay. The rule of 16 is an option. It's a VIX rule. So you hear all day long, the VIX is at 20, the VIX is at 15. Anyway, a high VIX means the market's crashing. You don't want the VIX at 50 or 60, or it means the market has already crashed. I mean, it's not what you want. It'd be like if you were sick and it's like having a temperature of 103, or it's like if you have really high blood pressure. It doesn't mean you're going to die, but it's a bad sign, right? So all the rule of 16 says is whatever that VIX number, they always talk about it on CNBC. Oh, the VIX is at 20. VIX is at 30, whatever the VIX number is. Let's say the VIX is at 32 today. You're listening to CNBC and the girl says the VIX is at 32. Well, what you do is you divide 32 by 16 and 16 goes into 32 twice. That means a VIX of 32 is projecting a 2% daily move either direction. That means the VIX is literally how expensive the calls and puts are and how how big the move would have to be to get outside of the time decay. As time premium goes up, and if you buy an option, anyway, all this measures is how far the market would have to move to make that option go in the money, or to make that option viable, kind of is a way to say. And 16 is the square root of 25 of 252. Yes, of course, and that's why it works. Because VIX is just the square root of volatility, or something. It works for that reason. Yes, thank you, Grateful Trader, for explaining that, because that's exactly why it works. But so we don't get a VIX of 30 often, but when we do, you're going to get 2% moves. Last week we had a VIX of 40, 50 for a few days. So when that is projecting 3% moves, and whenever VIX was on those numbers, those actual days, we actually got 7 and 8%. But one day we did, VIX was actually projecting low, but that's just VIX's projection. So in other words, if somebody would have bought a straddle, even though it was so expensive, the market still moved far enough where the straddle would have made money, especially on that one day. I mean, that one day was epic. I'll remember that one day the rest of my life. I mean, I'll remember that day just like I remember the 2020 bottom in March of 2020, whenever Bill Ackman came on TV and started bawling about the market and stuff. And it was the exact bottom. The market started rallying because he was saying that hell is around the corner or something, or he even cussed on CNBC. He said it's going to be a real, anyway, I promise not to cuss anymore this year on my station. So I'm not going to say it, but anyway. All right, guys. Well, what else if you guys want to talk about anything else, we can talk about it. But yeah, 252 is how many trading days in a year. So the square of 252, because there's something about VIX, and I took like 1 or 2 statistics classes in college. I took like Stat 1 and maybe like a couple of classes that dealt with this, but I really wasn't much for advanced math. I just really like to do algebra and math in my head, easy math. But as far as advanced math goes, but I know that VIX has the way that formula works. It has to do with the square root of time. So before that reason, when you divide it by the square root of how many days there are, but that's what it has to do with this. VIX is a 30-day number. Okay, that's what it is. VIX is a 30-day number. When you divide it by 16, you turn it into a monthly number. Well, now that's already what it is. You turn it into a yearly number is all it is. So anyway, okay, why triple QT and SPY T? I mean, it's up to you. It's anything else. I just like index funds, especially ones based on the NASDAQ. I mean, and the SPY, they're just like Defiance's other funds, except they only pay 20%, so they don't have as much NAV depletion. So they should, in theory, get more upside. I mean, it's math. They should usually. Now let's go see if that's how that's worked out. Let's compare triple QI to triple QT in the pullback, and I can already tell you what happened. I haven't even checked them out. Triple QT is going to do a hell of a lot worse, even though it's a better fund for a bull market. It makes it worse for a bear market. because it's a target fund. So it's a target fund. It collects less money. Well, nothing wrong with being a target fund, but the target is lower than the amount of money QQQY collects by about half. So it will have worse NAV performance on the way down, better on the way up. So let's go see. All right. So this is the way down. So triple QT, if you look, I'm a day too late. When the market was down, it was not beating it. But that shows you how powerful these things are. It already passed it on the way back up. But in the pullback, triple QT was down 15.3, triple QI was down 12.2. But now let's look. Let's pull it to right now and see the bounce back. Yeah, and so triple QT has already got back on top. They do a little bit better on the way up, a little bit worse on the way down. You can see up here that triple QT was leading in the bullish market, but then when the market flipped, it also flipped. It's two different philosophies between triple QT and triple QI. Triple QI pays about a 50% yield, but triple QT only pays a 20% yield. Triple QT does better on when the market's going up, but worse when the market's going down. Triple QI does better when the market's going down, worse when the market's going up, but pays a higher yield. All right, guys. So I'm going to get out of here unless you have any questions. I think I've answered all of them. Anyway, I appreciate you guys for being here. I'm trying to think if there's anything else. Did you go watch that SBAR video, SBAR? And yeah, go watch that SBAR video. And I'll be around on Discord if you guys want to talk about earning option trades or something. I'll do one on a cheaper stock. That's too. Don't do that one. And I don't know if it's gonna hit or not. But unless you have a bigger account, because that's $2,000 at risk if you miss it. And even if you have a $20,000 account, trading account, it's 1/10 of your account. I generally like on any one given trade to risk more like 2% or 5% of my account. So if I had a $20,000 account, I would. I'm looking at 400 or 500 for max risk. I mean, ideally, and you can get a bigger account on a $40,000 or $50,000 account. Those kinds of trades work perfect. So it's just math, but I'm trying to keep your variance from being too high. We'll go find a cheaper one. If you have a small account, let's go do the cheapest. Go do that SoFi and Starbucks and those ones that you can get in for $300 or $400. The math's exactly the same. I mean, you're still trying to get the same. The percentage is still the same, right? All right, guys. I'll be around on Discord. Yeah, and thank you for adding XV and SBAR. I appreciate you guys. Oh, what's this? I just missed a message from Ethan here. Should we learn about him? Sure. You aren't going to learn about him from me because I don't know anything about him. I've never traded him. I know nothing about him. I'm fascinated by closed-end funds as well. There are other influencers that know a lot about Cornerstone, and I follow one of them. He's this nice guy. His name's Todd. I'm trying to think of the name of his station, but I'm even in his Discord. Somebody asked me to be in his Discord, and it's a pay-for Discord, but they asked me to be in for free just because they like me. I guess because I'm another influencer. Kind of like I'm in Rod's Discord too. But he's a nice guy. That guy knows his stuff on closed-end funds. He's also into the fire lifestyle and stuff. His name's Todd. I'll find out who he is and put him in Discord. All right, guys. But yeah, let's go. If you are interested in that, more power to you. Go watch Todd's video. There's something that Cornerstone does called a rights offering, and you have to kind of understand how it works to maximize your potential. All right, guys. I appreciate y'all. Have a great day.